Good evening, good morning, good whatever time it is you are listening to this. I hope you are having a good one. I'm going to be going over the SPY, the data sets, and the earnings for March 31st, well, the week of March 31st. And just to kind of preface this, there's really no earnings this week. There's only um, Exam, ER, but that's Thursday after hours. Other than that, there's literally no other earnings this week that are important. With that said, let's go ahead and jump straight into the data. Now, we do have a very important data week. Let's see. There we go. It should be pulling up now. All right. So Monday, we don't have a whole lot on Monday. We have the Chicago PMI. Looks like it's the March. It's not a revision or anything, so that's good. Uh, Not really expecting too much out of that. Tuesday, we have. Let me make sure this is on the screen properly. Um, Tuesday we have the manufacturing PMI. Um, that one's not a revision, but and that's at 9:45 a.m. And then at 10 a.m. we have ISM manufacturing revisions. So that's why there's so many data sets in there. As you can see, the February data sets in there. And we also have the JOLTS data at 10 a.m. So that's Tuesday. Somewhat of a big day. I'm not really expecting a whole lot, but some of those revision days can be kind of hit or miss. So you can have kind of a massive day or not, just depending on what the market does with the data it receives on the revision. Wednesday, we have at 8:15 the ADP non-farm employment change. Again, not really expecting anything. They're expecting a major uptick. I don't really know how they're expecting a uptick, but we'll see. And then at 10 a.m. there's the factory orders, which I'm not really looking forward to too much. That's not really a big data set at all. Now, Thursday is kind of a big data set day, but Friday's the really big one. But Thursday, we have the jobless claims at 8:30. That's just the weekly standard data set. Again, that could be hit or miss, given, you know, essentially how the narrative for the market right now is really influenced by the labor market. So we'll see how that goes. I need to start keeping track of that a little bit more. 9:45, we have the global services PMI. I don't know if that's a revision. I don't think it's a revision. Um, it's not really anything major. That's kind of just leading into, what we expect out of like next week's data. Um, yeah, don't really expect too much out of that. But at 10 a.m., we have the ISM non-manufacturing data, which can be big. I'm not expecting anything too crazy out of that, but anything can happen with this data that can send us one way or another. So just be prepared for that. Now, Friday, this is the really huge day. We have the non-farm payrolls. Um, Obviously, that's a huge data set as always. They're expecting a tick downward in that, which I agree with that. We might see even less than that. We also have like the participation rate, the private NFPs, the unemployment rate. That's a really big one. I assume it's probably going to stay at around 4.1% since they're kind of holding off on a lot of the government employment data, but that's very likely going to tick upward, just based off of the cooling we've seen in the previous data sets, but we'll see. An upward tick would be pretty big for the market, but we'll see one way or another. Now, the kind of weird part of this day, which there's Powell and Fed Chair Powell and Vice Chair Barr speaking at 11:25. I don't know what speech this is. I think this is probably going to be some business roundtable type of thing. Um, but I can't find any information on that quite yet. So we'll stay up to date on that when the time comes and see if it's something major or not. But if it's just one of those business meetups, those are really just when Powell meets up with like a few business CEOs or leaders in some random district It's nothing major. They just do like a small Q&A and he asks if business is going well, blah blah blah. It's really just a nothing event. Now at 12:45 we have Fed Waller speaking. I don't really monitor Waller too much, but he can say stuff sometimes that can, you know, push the market one way or another. Just a quick reminder before we get into the technical analysis. If you've been finding value in my insights, consider joining my Patreon. For just $12.99 a month, you'll get access to my trades, courses, and powerful tools to help you grow as a trader. I'd love to have you be a part of our team and community. And it's less than 43 cents a day. So if you'd like to join, click in the link in the description. Thanks. And with that said, let's go ahead and jump straight into the technical analysis. And as always, we're going to start with the daily chart. And we are going to look over the moving averages and the Bollingers. And again, the moving averages, I'll call them MAs throughout the videos. So if I say like the 5 MA, that's the 5-day moving average, so on and so forth. Now, we've had a really interesting week last week because we were starting to break out. Um, I'll talk about that in a bit. Let me just actually go over the levels first, and then I'll jump into what's going on with that. So the actual levels, we currently have the 5 MA at 568.17. This is gonna pull down a massive amount just due to how like where do we close or where we closed on Friday, and we closed at 555.66, so that's a whole $13 down. Um, on the price. So the 5 mil should very likely open around the 560 to 561, and that's kind of just really ballparking it. It could be higher, it could be lower. But just mark it down on Monday morning, exactly where that 5 mil is because that's going to be a really important level. Now the 10 mil is currently at 565.89. The 20 mil is at 566.19. And the 200 mil is at 570.79, and the upper Bollinger is at 583.75, and the lower Bollinger is at 548.62. Now, we've been seeing a lot of consolidation within the moving averages. So we've been seeing the 20 mile pulling down, still pulling downward. We're seeing the 10 mile pull downward. It's finally pulling back upward, and it's consolidating downward a little bit. The 5 mile, same story. It was pulling upward. It did get up to the 200 mile almost, and it rejected. Now, I don't think this is going to be a hard rejection, but what I am looking for now is for these moving averages to straighten out. And what I mean by that is that you want the shortest duration moving average to be the first one uh, in order. So it's like you want the 5 mile, the 10 mile, the 20 mile, etc., etc. So it's like you want the 5 mile, the 10 mile, then the 20 mile. So more than likely, that's just the consolidation happening for that. Um, we're gonna see the 5 mile again pull downward, probably way below where we have the 10 mile and 20 mile currently. So with that said, that does open up the bottom Bollinger again, which with it being at 548.62, that's right at the bottom of this inverse cup, which I'm going to show you in just a second. I'm going to turn off the moving averages and the Bollingers. Um, but we have this really nice cup right here, and I will apologize for the boxes, but we have this inverse cup forming right here. And now that we finally broke back into this liquidity zone, we rejected the liquidity zone above us, so this area is gone for the moment. But now we have this area to trade within, which is the 566 to essentially the bottom of that, the 548.03, and very likely this liquidity zone is going to expand. And I've talked about this one gap for a really long time now, but there's this 536, uh, basically right on the spot, 536. And what this inverse cup is going to do is going to form liquidity to push down into that inverse cup or into that gap. So what I'm looking for here is we have this very large inverse cup, which it's kind of wonky because the bottom of the cup's really truly at the bottom of this gap. So this cup technically should be like all the way from here to there. If this plays out. And seeing how we got that large sell-off on Friday, well, Thursday and Friday, we rejected the 200 mile for now. Uh, very likely we should be looking for that. And if you look at this structure, I'm going to delete that and that for a moment. But we do have a head and shoulders forming. Let me show it back on the daily. It looks better. Nope, I want to show it on the 4-hour. We have a head and shoulders forming right here. So I talked about this last week, but if we started rejecting this area and not building good liquidity up here, we could be, forming a really big head and shoulders right here. Now, granted, we did pull down all the way to the bottom here, so what I am looking for here is, again, this cup to entirely fill out and for a handle to build upward, very likely towards the bot or towards the top of this liquidity zone. And we'll expand this liquidity zone as we start pushing downward. Very likely, again, it's probably going to go to that gap. That should be the expectation. Now, assuming if we don't break down entirely here, and seeing how we did expect this handle upward, this does mean that there is going to be some bullish momentum, which means that this sell-off can technically turn into a cup and handle. And what we're really looking for here for the bullish thesis is for us to break back into this liquidity zone. That's entirely what you have to be looking forward to this week is essentially breaking back above that 560, 564.46-ish, give or take, just a little bit. So that's kind of the bullish thesis. Look for that inverse cup to kind of fail. So say the bears start building the liquidity on this cup, and it just ends up breaking down, or it ends up the buyers end up picking up. It would cancel out that if I could draw it properly, it would cancel out that inverse cup handle, because the inverse cup would expect downward, then it would expect to come upward and reject here. But if it doesn't reject here, if we see the buying pick up and fill out this cup, then this inverse cup basically gets nullified. So that's kind of the thesis for now. Very likely we're going to see some major rejection just because we have basically broken out of the bullish area. And then that's kind of what you have to look at this as right now, is getting into this area is basically entering, the bullish zone again. Staying in this yellow is staying in the bearish area. Now, should you be buying calls down here? I would be. But you do have to be careful for that bottom Bollinger. They could still push it down before they decide to build a handle from that, build a bullish structure right there, build a handle upward, and then pull down further. So just be careful of buying those calls too early. If we don't see the market like heavily pick up buying and pull back to the 5 month, then expect to head to the bottom Bollinger, and then we can position some calls from there. With that said, I did not cover the daily ADL, I don't think, so I just wanted to cover this really quick. But no, I can't draw on the ADL chart, but we basically have a channel right here with the whole sell-off, the correction. And we were buying above that channel, but now we've broken back into it again. So we just have to be cautious of just we're back in that channel. We need to be cautious of um, you know, this further head and shoulder playing out, and it could look like a inverse cup and handle here. Again, that can turn into something like that and pull downward. It won't pull all the way down to there. I would expect the bottom of that liquidity zone at the very worst. If we do break down below that, then we can look at the 507. But I'm not looking at that for a very long time. We have this very nice selling channel here. We have this really nice selling channel here. So the likelihood is if we do come down, we're just going to pull down to the bottom of that gap, bottom of that selling channel, and then start heading back upward. So with that said, have a good day, have a good night, enjoy well, I should say enjoy your weekend. It's the start of the week. So I'll see you tomorrow.